Sometimes when I invest in dividend-paying stocks, I will invest as much as $10,000 in a single buy order. Other times when I invest in dividend-paying stocks, I will invest as little as $50 in a single buy order. I get this question all the time. Ian, you own 38 stocks. You make all of these transactions each month, buying into dividend-paying stocks, stocks that pay you cash flow. You make all of these trades. Ian, how do you keep your commissions low? Don't commissions worry you? And Ian, do you save up money? How do you approach the buying process? And so today's video actually analyzes my personal trades, my personal buy orders that I have made over the years. I took all of my data, I compiled it into one place, and I want to share some statistics with all of you because I think the end result will really surprise a lot of you. It actually surprised me. I always knew that my commissions were relatively low. They weren't a really big deal in the scheme of things. But when I looked at the data, they were even lower than what I thought. And so the takeaway from today's video is that this strategy that I share on my YouTube channel here, it is my personal journey. I'm sharing it for fun and entertainment, but I believe it's a strategy that can apply to all different types of people. It's really for everyone. And the reason for that is a lot of my success in dividend investing. While I've made these larger trades, I've bought $5,000 worth of stock at a time or $10,000 worth of stock at a time. A lot of my trades, the lion's share of my trades by count, are these smaller trades. You're going to see in a minute how I've made a ton of smaller trades, and that part of my strategy really works from a commission standpoint and from many other standpoints as well. So I'm really excited about this video. Let's talk about buying dividend-paying stocks. So yet another subscriber request video. By the way, everyone, I truly appreciate all of these questions. This is a thriving YouTube community. I am so blessed with all of the subscriptions, likes, comments. I just want to remind everyone out there, I am not charging for a course. I'm not trying to sell a course here on YouTube. So if you do appreciate the content here on my YouTube channel, the best way you can thank me literally is to subscribe to this channel. One day I plan to write a book, and so that's probably something around the corner here that I will be looking to promote. But other than that, I am not trying here to sell a course to anyone. My best content, my best quality content is right here on YouTube. So again, if you subscribe, that is the best way you can thank me. So anyways, I looked at all of my data, my trading history. And by the way, I face some of the same challenges all of you do. I don't have a lot of time. And so my database, my trade database, it's a little bit outdated. So this database, the data I looked at goes through 2016. But I'll tell you, in the last 2 years, more or less, my trading philosophy has been very similar to my years prior. And so directionally, this should not change much once I update my database, but I just haven't had the time. It's actually one of my 2018 goals was to sit down to get my database updated. I still have, a month and a half to get that done, so I gotta do it. But that's just one thing to take note, that this is through 2016, but still a huge wealth of data because I've been investing here for a very long time, for over 20 years. And by the way, most of my investing activity has been in the last 10 years. These are the years when I've really had a good sizable income coming in from working, and I've been able to save some of my income to deploy into stocks. So that's really where I've built the lion's share of my dividend stock portfolio. So what I did is I first partitioned my buy orders into different buckets. I looked at these buckets like, hey, how many buy orders did I do that were less than $200? How many buy orders did I make that were 200 to 400? How about 400 to 600, 600 to 1,000, so on and so forth. I partition them into these different buckets because I make all different sizes of buy orders. Typically, I am in favor of more orders than less. I guess the only downside of that is the accounting of it all. Like I said, I need to update my own records, but that is something that comes with the territory. And quite frankly, I enjoy that process because it is fun and motivating and keeps me focused in the game on what I'm doing. I'm building a massive stream of passive income. And so I make all these different types of buy orders, I partition them, and then what I did is I just looked at the count. I did a pivot table in Excel. I counted up how many trades did I make in each of these buckets. And then what I am representing here on this chart is the percentage of the total. So all of them add up to 100%. And so what count of trades by count did I make in each of these buckets? I was surprised. I didn't realize I had even made this many small trades, but it kind of makes sense in retrospect. But I basically made 54% of my trades have been less than $200. That's right, more than half of the trades, the buy orders that I've made to purchase dividend-paying stocks are less than $200. Here's where it gets even more interesting. I am not factoring in reinvesting into this analysis. So these are pure buy orders, new money being put into the system, not reinvesting dividends. I'm doing that also. That is not incorporated into today's analysis. I wanted to look just at pure buy orders, adding money into my dividend stock portfolio. And the fact that I'm making over half of my pure buy orders less than $200, that I think should communicate volumes to everyone out there that may just be getting started, may be concerned, hey, am I investing enough money? Am I just too small to get started at this? Oh, I'll never be successful because I don't have enough money to invest. I am here to say that I have built a pretty nice portfolio here, brick by brick. One little trade at a time. They all add up, averaging in multiple times each month to a variety of stocks over many years. It adds up. And so let me go on. 200 to 400 bucket, it represents 22.3% of the trades. 400 to 600, 6.6. 600 to 1,000, 7.4. You can see the numbers keep going down as the dollar amount gets bigger. 1,000 to 3,000, 6.3, 3,000 to 5,000, 2.3, and then 5,000 plus, only 1.2% of my trades. And so again, I have built a pretty nice portfolio, but only 1.2% of my trades have been, my buy orders have been $5,000 or more of capital. And you can clearly see here over time, I've been biased towards smaller trades. I like averaging in. This is something I've communicated on my channel for quite some time. It just makes me more comfortable for a variety of reasons. One, it keeps me in the game, my head in the game. For me, if I'm just going to save up a sum of money, there is a risk that I'm going to spend the money. So for me, when I get money through the door and I want to invest it, I'd rather just get it working for me immediately. It keeps me in the game. It keeps me focused. It lessens the risk that I will squander that money. And so for me, I love staying in the game. And I also like this concept of averaging in. I like to buy as the stock market is going down. I like to buy as the stock market is going up. I don't like taking the risk that I place all of my capital at the peak. I like to optimize my buy price. And the way that I optimize my buy price, I get the best possible buy price, is I buy all the time. And it smooths out over time. Sometimes when I'm buying in a little high. Sometimes when I'm buying, I'm getting some real deep discount. They all average out, so over time, my buy price is pretty darn good. Now, don't get me wrong. Sometimes I do save up a little bit of money on the side so that when a stock plummets and there's a real buying opportunity, I can snap it up at the bottom. And that certainly helps my average cost, my weighted average cost of the shares go down. And so that's another strategy as well. But most of the time, I'm just literally averaging in each and every month, and I just stay in the game. I love it. I love the excitement of making those trades. And a lot of you, again, you've heard me communicate this message and you're like, Ian, wow, it's a lot of trades. I'm really concerned about what are you paying in commissions? Is it eating up your returns? And so we will get to that in a minute. But long story short, no, it is not. It is not at all. And that's why I'm saying, look, I'm just sharing my personal journey here on YouTube. But really this strategy, in my humble opinion, is a strategy that could potentially apply to everyone. So moving on, what I did next, again, this was count of the trades. So it's the dollar amounts, and then I did count. Count means I did a pivot table. It was the number, literally the number of trades in each bucket. And so by volume of trades, my biggest bucket was less than 200, 54%. Second biggest was 200 to 400, 22.3%. That's pure volume. But what I did next is I did the same analysis, but I didn't just look at volume this time. This time I looked at dollars deployed. I looked at the same buckets, but I looked, okay, Ian, how much dollars did you actually pump through that bucket into the stock market? How much money did you deploy? Raw dollars, not count of trades, not number of trades, but dollars. And so I looked at, again, less than 200, so on, 200, 400, so on and so forth. Now, actually, before I get to that, one other thing that you'll see on this chart, going back to the last one, I also did two kind of high-level buckets, so I got a lot of buckets here. But to illustrate this point even further, I look at the less than 200 through 1,000, and then I look at 1,000 through 5,000 plus. If you sum these up, basically less than $1,000 comprises 90.2% of my trades by volume, my buy orders. So again, this is really telling. 90% of the trades that I'm making in the stock market, the purchases of these world-class dividend companies like 3M that make this Post-it board, they are less than $1,000. It's only 9.8% are 1,000 or greater. So anyways, though, moving on to the next table, I look at the dollars by category, and the dollars less than, this is where it changes, it smooths out a bit. Less than 200 is 10% of my money has been deployed that way. 200 to 400, 10%. 400 to 600, 7%. 600 to 1,000, 14%. So you can see it's smoothing out here more. In the bucket of 1,000 to 3,000, that's actually my biggest bucket. 24% of my dollars have been put to work in the stock market by making trades from 1,000 through 3,000. 3,000 to 5,000, 19%, so that's another big bucket. Second biggest bucket. 5,000 plus, 16%. Third biggest bucket. So here the story is a little different. When I sum up less than 1,000, I get 41% of my dollars have been deployed that way. And if I look at $1,000 or more, 59% of my dollars have been deployed that way. So this makes logical sense because when I'm looking at things just from a number of trades perspective, I'm making a lot of these smaller trades, but when I look at it from the dollars deployed perspective, obviously some of these larger trades, these really large trades like these $5,000 trades, $10,000 trades, these are carrying a lot of weight, and they are by dollar volume making up a big percentage of capital allocated to dividend-paying stocks. But still, a staggering 41% of my dollars have been deployed in small trades that are less than $1,000. And a lot of them down 20%, down less than $400. That's pretty cool. And the story there, again, is a lot of investors out there, they do not have $10,000 to deploy in the stock market at one time in one single trade, and that is okay. Moral of the story is that the strategy works and moreover is accessible to everyone in my humble opinion. So here's where it gets really cool though. I get this question all the time. Ian, are you getting eaten alive by these commissions? You make so many trades. So many trades, Ian, on a monthly basis. You're always buying these dividend stocks. You can't stop buying these dividend stocks. Do the trades, the commissions catch up with you? No, they don't. So what I did is I looked at my commissions over time, and I even looked at them by bucket. But overall, on a total amount, I just looked at the dollar amount of all of my commissions, and I then divided by the capital allocated to the stock market. Overall, my commission level is about 0.46%, so real low. Most of the dividend stocks that I purchase on an ongoing basis, they pay starting yields. This isn't even yield on cost, just starting yields of typically 3%, I would say, or more. But let's look at the commissions by bucket. This one obviously being the bucket with the most trades and the highest amount of dollars contributed to the stock market, it has the highest percent in terms of commissions paid divided by capital allocated, and it's 1.5%. And by the way, my general rule of thumb is I don't want my commissions to be more than 2% of the trade. If it's 2% or more, typically what I will do is I will just wait. I will wait on the sidelines. I will gather up more money to invest because I don't want my commissions to be 2% or higher. Or if I don't want to wait, I'll find another vehicle for buying that stock. I'll find either a way of buying the stock with a lower commission or maybe even acquiring that stock for free. We will get to that in a minute. But anyways, what's exciting is 1.5% here. In the next bucket, 0.76, 0.61, 0.5, 0.22, 0.25, 0.13. All averages out to 0.46. And so even in the bucket where I'm making the most trades for the lowest amount of dollars traded, my commissions in terms of dollars paid on commissions divided by capital allocated into the stock market, it's only 1.5%. That is about half of the amount of money cash flow that I would receive in year one from the dividends from those stocks. So I am more than covering the commission in the first year. And what's so exciting about this strategy is it's a very commission light strategy because I'm buying and holding forever. Literally buying, holding forever. And so this is kind of a one and done. And so at a 0.46% commission, one and done, no active trading here, buying and holding dividend stocks that pay dividends, cash flow forever. I was so pleasantly surprised with this because I always knew my commissions were low. I always knew, hey, Ian, these are kind of inconsequential. Literally, they're just kind of inconsequential. I don't worry about commissions at all. But I receive so many questions here all the time. Ian, the commissions, they must be eating you alive. Ian, I'm scared to start investing because the commissions are so high. I'm worried, I hear. And I'll tell you, there's a lot of propaganda out there in the marketplace because people are trying to pitch certain products, certain financial products. And it's true, there's a lot of analysis that in the long run, especially with a strategy that is heavy on trading, especially in maybe an account that charges a really high fee for that trading, the commissions, they can really add up and they can hurt one's long-term investment returns. But what I'm here to say is my strategy is so unique. I'm buying and holding forever. I'm doing so in a really cost-effective way. And I've just found that the commissions in the scheme of things, they're inconsequential. And so again, the exciting takeaway here from all of this is Ian, is dividend investing only for people who can make these $10,000, these $5,000 buy orders? No, it is not. In my humble opinion, this is a strategy that could apply to anyone, to everyone, and so it's really exciting. Now, you may be thinking, Ian, how do you keep your commissions so low? Well, there's a few ways. You guys know I own 38 dividend-paying stocks, a lot of stocks. But just as I diversify my dividend-paying stocks, I diversify my means of purchasing dividend-paying stocks. Typically, I am a favor of world-class brokers that have a brand name, that have a reputation, that have a lot of insurance. You guys know out there as well that I am a big proponent of dividend reinvestment plans. I've done a video, I'll link in the description below. I like those plans. I think they're really good for newer investors. And not all of them are great these days, but a lot of them are still really low or even free in terms of commissions. They charge no commission, and so those are really good to be on the lookout for. And another avenue of buying stocks that I'm starting to entertain, I'm starting to look at these opportunities a little bit further, primarily because of feedback from my subscribers at our recent meetup, is there are a lot of new brokers, new technologies and apps, and a lot of these they're charging no or very minimal commissions. And so there are many avenues, but I'll even tell you, even with the old school avenue, like a big broker, which is an avenue that I really enjoy, oftentimes, if you go to that broker and you deploy a certain amount of money, you give them a certain amount of money, or even you're just opening a new account, they'll have an incentive and they'll say, hey, you bring your business to me, I'm going to give you 10 free trades. I'm going to give you 20 free trades. Oftentimes, if you have an account with an existing broker, it never hurts just to call the broker and say, hey, I'm thinking of taking my money out of this account. I'm thinking about these other opportunities. This other broker seems to have a really compelling offering. Is there anything you can do to win my business, to keep my business? And it never hurts to ask. This may be a great way to earn some free trades, but in our modern society, I think a lot of people take these trade amounts, these commission amounts at face value. They don't challenge them. They don't spend enough time just thinking, how can I lower the cost of my trades? And I'll tell you, it hasn't always been at the top of my mind. It hasn't always been, oh, my primary strategy is to keep a low commission. But it's always been kind of a secondary objective. It's always been in my subconscious. And I just try to minimize the amount of money that I'm paying for trades. And it clearly shows here in the numbers. So I'm definitely not overdoing it on commissions. And I'll tell you, I make a lot of trades. And so again, takeaways from today's video. I love making a lot of trades because it helps me stay in the game. It helps me average in. I think it's, quite frankly, I built a nice portfolio doing this. It is firsthand evidence that brick by brick, that small step-by-step strategy, it can work for anyone. It is accessible. This strategy is not just for the rich and famous. This is a strategy, in my humble opinion, that could be for anyone. And the other takeaway is a lot of people get scared by trades, by commissions. They're concerned that these commissions are going to eat them alive. And I think it's good to be cognizant of that, to find ways to minimize commissions through discount brokers, free trades, dividend reinvestment plans, new technologies and apps. But overall, at least in my many years of investing, over 20 years now, I have just not experienced a major issue overdoing it with commissions, and I've made a lot of trades. So all fun stuff out there. So thank you for that subscriber question. I really, really value these questions. Please keep them coming. They fuel the content here on my YouTube channel. So before we leave today, I need your help, everyone. So I have my stunner shades on, the Karl Kani hoodie here. I am trying to really harness, to embrace my inner thug at this point. I am trying to summon Thug Life Ian. There is a subscriber on this channel. His name is Thug Life Ian. He actually is building up a following, it seems, on his own YouTube channel. He always puts really awesome comments here in the comment section below. Everyone enjoys them. They're funny. They're really comical. And unfortunately, Thug Life Ian, he has not been around. Something has happened. So I am praying for Thug Life Ian. And I'm trying to summon him back with the Karl Kani here. You guys know I got the Karl Kani. If you guys enjoy rap culture, hip-hop culture, you know what this is all about. And so the thugs out there, all the thugs in the Thug Life Ian community, in the PPC Ian community, let's take a moment. Let's take a moment right now. Close your eyes, pray. Let's use our collective power to bring Thug Life Ian back. I am praying for you, my friend. I hope everything is okay. We appreciate you here on this channel. We love you. You are awesome. Come on back to the PPC Ian community. We hope to see you in the comments section below really soon, my friend. We are waiting for you to return. Before we leave today, in terms of full disclosure, I own the stock mentioned today. I am long. I own shares of 3M, ticker symbol MMM, the people behind this awesome post-it whiteboard. In terms of full disclosure, today's video is not investment advice. I'm not a licensed investment advisor. Today's video is just for your fun and entertainment. If you're going to go out and invest in the stock market or anywhere else, please consult a licensed financial advisor first. Literally, I'm just sharing my personal journey here on YouTube for fun, for everyone to see. Thank you so much, everyone. I will see you in the next dividend investing video.